Hello and welcome to yet another episode at Everything Real Estate with Rumbi. And today we are unpacking an interesting conversation on insurance and real estate with Minerva Insurance. With me today, I have a special guest. Welcome, Lydia.
Thank you, Rumbi,
Yes,
for having me.
Thank you so much. Please introduce yourself, your role at Minerva Insurance, Minerva Risk Advisors. That's the correct term and the name for the company, and your area of expertise.
Thank you, Rumbi. My name is Lydia Tanyanyiwa, as you rightly indicated. I'm the Group CEO of Minerva Risk Advisors. We are a composite broker, and we cover all manner of risks, from the personal to property to medical, reinsurance. We look after all those risks. We are a 47-year-old. No, we were founded in 1947.
Wow.
And we are the largest broker in terms of risk advisory in Zimbabwe.
Risk advisory, not just insurance, but risk
we are not
advisory.
Just insurance, no.
Interesting. So, for listeners today, they want to know what kind of insurance or solutions do you provide for property owners? Because it's all about real estate, and we'd want to know what kind of risk advice and insurance that can be provided for property owners.
Okay, I would like to go a bit of a step before that into property insurance.
Yes.
There are various categories of it. There's a construction phase insurances that you would require. As a homeowner, you're building your house, or as a developer, you're building a set of cluster homes.
Okay.
So there are certain insurances that you require before you actually sell the property or people move into the property.
So insurance can be prior
Oh yes,
to
definitely.
occupation.
Oh yes, definitely. You know, there's contractors all risks. So whoever is constructing your property, they have to have the necessary insurance cover to cover that process of construction.
Okay.
They may also need to have public liability insurance, because during construction, somebody might get hurt. The scaffolding is along the driveway or the road, and somebody is walking under, somebody gets hurt. There is workers' compensation that is required. The builders have to be covered.
Okay.
I know a lot of people, when they are building, they don't really consider these things.
Yes, so I'm thinking I'm building my house there in Glenlawn, and it has 2-3 floors.
Yeah.
There's risk in that.
There's serious risk, and is your contractor insured? Because that risk shouldn't fall upon you. It should fall upon the contractor who is building.
Okay.
Latent defects as well. You need to have cover for latent defects that may not be visible to the eye on delivery of your property.
Okay, unpack latent defects to my basic listener out there.
So these would be defects that would not necessarily be visible to the naked eye.
Okay.
But once you move into your property, you realize that there is something which is not correct, or there is a leak somewhere which will only manifest during the rainy season. So you need to have that, the contractor needs to have that latent defects.
So I'm saying, if I am insured, if anything happens to my employees during the construction, I'm insured. That risk has been covered. If anything then happens, or if I come to realization that there are defects which I could not see during the construction, I'm also covered.
Yes.
So I can cover myself or my contractor.
Your contractor must cover themselves.
Oh, their contractor must cover themselves.
You have to satisfy yourself that this contractor is properly insured. All too often we bring in contractors and we've got no recourse. Many people then come back after the contractor has been gone. Maybe you've been living in the house a year and you first suddenly find there are certain defects that were not evident at the time that the property was handed over to you.
How long does this period cover, whereby I should, let's say, is it first 5 years after construction or first year? Does it vary?
It really depends on the contractor himself, if he's a professional one, he will have the correct cover for the correct period.
Okay.
You shouldn't have to negotiate that.
Okay.
It comes as a standard.
Okay.
And I don't have that information immediately available with me.
All right.
But what you just need to do as a client who is bringing on a contractor is give me your contractor's all risk policy. And it would be good to pass it through a broker like Minerva. Then that's when we check.
All right.
So what we do for corporate clients, for instance, if they're having renovations in their factory, we ask them to give us the contractor's insurances. And then we go through them to see where they may be defective or where they might be missing those aspects that are critical to the construction.
Now, the advisory role would have kicked in.
Yes, this is where an advisory role like Minerva would come in.
Interesting.
Yeah.
So as you are engaging your contractor, be it here constructing cluster homes, a commercial property, or even just your residential, isn't it?
Yes.
Make sure your developer or your contractor rather is insured. Now that's prior to moving in. Now the property is now fully mine and I am the rightful owner. What sort of risk management or risk advisory do I need and how can I be insured?
Right. You have a property, it's got a certain value. And you would like to be covered to the extent of that value. The principle of insurance is to indemnify you. The principle of insurance works on the basis that insurance should put you back in the position that you were in prior to the catastrophic event or to the problem occurring.
All right.
So if this house is worth 300,000, for instance, you want to make sure that in the event that the house is completely destroyed, you are able to be paid your $300,000 to either rebuild or buy a similar property.
All right.
That is really the principle of insurance.
So do you look at what can cause the destruction? Is it nature? Is it, we know of the common one, fire. Are there any other things in your field that you have realized that, oh my God, they can actually contribute to a destruction? It might not be at 100%, but possibly it affects the property. Yeah.
Okay. There is any of many things that can happen to a property.
Yeah.
At the moment, we're all using gas, for instance. And I think every homeowner or every tenant in a home must make sure that their connections are correct. What's coming up now is solar connections that are causing fires. And we are aware
and
of
almost
several
every house has solar now. Solar backup.
Because some of the contractors you bring in to install your solar, they're not 100% kosher. And at the moment, I don't know whether there's any institute that sets standards for solar engineers and solar installations.
Right.
But we are aware of quite a few houses that have gone down as a result of bad solar connections. So you can have flooding, your geysers might explode, and your whole ceiling comes down.
It all sounds like something that you can read in the article to say there was fire that destroyed this particular house. But now when you're breaking it down like that, to say my geyser, my solar geyser, my solar backup, and my gas, my kitchen, makes it a reality.
It does. You see, with property insurance, it's not a very costly insurance. For a house costing, say, $300,000, and this is just a general number that I'm giving you, the premium could be only $300 a year.
A year?
Yes.
It all depends with the value of your house.
Yes. It's a percentage. I think it's 0.01% of the value of the house. This is normal house owners insurance. So
do you have a benchmark to say if it's low? Let's say the house is worth the 50,000. Are you okay with that, or you have a benchmark that you can only insure from this?
No, you can insure whatever the value of the house is. The premium also then reflects the value of the house. But one has to be very careful. If you undervalue your house, then, and you find out, say you insure for 100,000, and you actually find out replacement value of that house is 300,000.
Yes.
Insurance is only going to pay you to the value of 100,000.
Now that's an interesting conversation, because this is where a lot of questions arise from. How do I get satisfied to say the value that you have pinned for my house is the correct value? You haven't overcharged it or undercharged it.
It's not in the interest of an insurer to overvalue a property, because remember, what you are insuring for is replacement value.
Oh,
So the contract between yourself and the insurer
Insurer, yeah.
is to put you in the same position that you were in. We call it betterment. If then you have a problem with your house and it needs to be replaced, and you're now replacing it at a higher value than what you were insured for, you are now claiming for more than what you were covered for. So insurance is to put you in exactly the same place that you were before the catastrophe happens.
Okay.
So it actually doesn't benefit you to overvalue your house. And in most cases, the insurers will send a valuer to your house. It's not in their interest to overvalue your house
Because-
for increase the premiums. Because if they then do that and then the replacement value is less, then we apply what we call average. And then you don't get paid the full amount that you had overvalued your house by.
Oh, interesting. Now, let's unpack this a little bit. There are issues in relation to when it's time now that the unfortunate event has occurred and you want a reimbursement of what you call it. There's a name that you...
The claim.
Yeah, of the claim. Now, when the investigations are ongoing, are there chances that you would say that, oh my God, no, we are not going to cover this Rumbi because this was due to your negligence? But then this is exactly what I insured for. Does it also cover my negligence? Let's say it was my mistake that caused the house to be on fire, for example.
I think if it's willful damage,
Okay.
That's-
It's willful, not negligence.
it's willful damage, because willful damage is almost criminal.
That's an offense now.
Yeah.
Okay.
And you also have to understand your policy wordings. This is where your risk advisor comes in.
Okay.
If you go through directly to insurance company, they'll give you, this is the policy that we're selling you. It is worth, it's
So
covering
much.
you for this much. But there is a lot of small letters that are in there.
In the
that
fine
the
print,
ordinary person would not necessarily sit down and go through. This is where you need to have your broker,
Yeah.
who can say, look, the wording in this policy, this is what it means. These are the exclusions. Because most insurance policies will be very clear. Willful damage is an exclusion.
Okay.
I'm not sure negligence, how you prove negligence was willful or not willful.
Yes.
Yeah. So you need to go through all the individual clauses.
So
in-
it all
in your
goes
policy
down to
wording.
what you signed
Yes.
for.
But as the insurance industry, that's why we've got advisors
Okay.
and brokers.
Okay.
Because we represent your interests in sourcing insurance solutions.
Okay.
Because you are not an expert in
No.
So if you give an intermediary like a broker or Minerva risk advisors, for
Yes.
instance, then we take that role for you and we then spar with the insurance companies
To
and
make
to make
sure.
sure that our clients' needs are required.
So I should have a proper disclosure with you guys.
Yes.
In everything that I'll be doing.
Definitely.
Okay. So let's continue with this conversation and unpick on. I had requested for a clarification that if someone says they are insuring an immovable property, what exactly are they insuring? Is it just the immovable property or the content?
Okay. Contents are completely different.
Okay.
That is called householders cover.
Okay.
The first one we're talking about, the immovable property, is house owners.
Okay.
Property.
Yes. House owners.
So house owners talks to the physical building, and contents, householders talks to the contents.
All right.
And you cannot combine the two. You can have a combined house owner's content insurance, but it's very clear what is covered in each.
Okay.
Yeah. So your contents is your televisions, your movable, your sofas, your beds, your curtains, your clothes. Yeah, the stuff that you can move.
So someone should really be very clear when they're saying my immovable property, my house is insured. Are they referring to the structure and the
Yes,
house,
you need to
the
have that
immovables,
clarity, yeah.
or you're referring to the contents?
Yeah.
Oh, interesting. Moving on, who should consider this type of insurance? Both, mainly today we are narrowing on the immovable insurance. We are not talking about the contents. Who should consider this type of insurance when it comes to homeowners, landowners, farmers, and developers? Do you say all of them? They are people who should be in a position to consider this.
Okay, if you look at farmers, farm insurance is a whole big knowledge in insurance. So with farmers, you're talking about crop insurance, you're talking about assets insurance, the center pivots, the tractors, the combine harvesters, but their house can be insured under house owners insurance.
Okay, so in a layman's language, the first part that you're mentioning is the content, if I can put it that way.
I wouldn't call it content, that is assets.
Oh, those are assets.
Those are assets that the
Okay.
farmer is using on his farm. The contents, you have contents in his house. Those would be householders insurance.
Okay.
House owners insurance will be the farmhouse. Yeah.
But as on an advisory role, do you see it as essential for a farmer, be it asset content or the immovable property itself, to have insurance?
Oh, I would say it's absolutely critical. Imagine if there is hail and the farmer is farming tobacco. And we have specialized products for tobacco hail.
Yes.
So, or for winter, now we're in winter, there is frost for winter wheat. The farmer needs to be insured for that.
Yeah.
There's also wind damage to crops. There's all sorts of hazards that can affect a farmer's operations.
Yes.
So farmers should also take out comprehensive, extensive insurance for their harvest.
Yes.
Yeah.
As well as their immovable properties.
As well as the immovable property.
Definitely. And to homeowners, because someone might think, well, I'm just a homeowner, and is there really need for me to insure it? Now, I'm going to ask in relation to, let's say they are in the States and they are not in Zimbabwe at the moment, but they have left a tenant on the ground. How does insurance protect you from such an arrangement?
Some policies will have specific clauses that talk to if you're using the property as a business venture. So if you're using it as an Airbnb, for instance, or evidently the risks that are associated with that property
Are higher.
they are higher. You get people who who are not vested in that property. They're just coming in for 5 days and then they are leaving. They might leave in iron on, they start a fire.
Yes.
Anything can happen. So some policies will have a clause that talks to your use of your property as a commercial venture.
Also, when you have tenants, it has already moved from being just basic to commercial.
Yes, because purpose of use of the property also must be clarified.
Okay.
Yeah.
It's for income.
Yeah.
Income, if I'm to say.
Yeah.
Okay. So this is a call to everyone out there to really realize that the risk is there. It doesn't really matter whether your property is being rented out by 4 people, by 5 people. It even makes the risk a little bit more higher as compared to someone who's just staying there with the family.
Oh, yeah.
Interesting. So this can be considered by homeowners, by landlords, by farmers, and by developers.
Yeah.
All right. So what is the difference between insuring the building itself and insuring the content or other interests linked to the property? I had asked this prior. You slightly mentioned it, but maybe you can re-echo and explain.
Okay, from a contents perspective, we know how armed robberies are being carried out at the moment. I think it's a foregone conclusion that at some point somebody will attempt to get into your house.
Yes.
And try to go away with your high value assets like your televisions, your laptops, your cell phones, sometimes even money. So I think everybody should really consider taking contents insurance. And unfortunately, with insurance, you may go for years and years and years and never be hit.
Yeah.
And then it just takes one day and you get hit, you are away on holiday and you come back to an empty house.
Now, on to that issue which you just tapped onto. In the event that you realize that, honestly, I've been paying for over 20 years and nothing has happened, is there any recourse to that? Is my advisor? What will you say?
Okay. I think the biggest issue here in Zimbabwe currently has been our currency fluctuations. So our policies do not have a cashback facility.
Okay.
I've got some personal insurances for my properties in South Africa, and they've just introduced a cashback benefit. So if I don't claim for 3 years, I get back 10% of the premiums or something like that.
Yes.
And that is very, very much in mature economic environments. Now in Zimbabwe, if you look, we were on US dollars, then 2018 came, then we were on RTGS, then we went back to US dollar, and then ZIG came in. So in terms of the actuarial analytics that are done on premiums, it's very difficult to have a situation where you can start thinking about cashback benefits for people that are not claiming. But as our economy and as our currency situation matures, I don't see why we shouldn't have such cashback.
So currently our service providers are not offering that.
They are not offering cashback.
Now, is there a way whereby my property is in Zimbabwe but I'm insured with a South African insurance company? Is that...
No. You are not allowed. By law, it's not admissible to insure an asset in Zimbabwe outside of Zimbabwe. If you would like to insure outside of Zimbabwe, we would have to go through to IPAC and give justification that you would like to externalize your cover.
Okay.
And as far as I know, unless it's a mega risk which this current market cannot contain, I don't see at that level any approval.
Okay. So let's move on to commercial buildings. What have you observed so far in the industry whereby you see that investors who are into real estate but commercial real estate are missing it when it comes to insurance? Are there any specific gray areas or glitches that you can actually say this is something that you have to look at?
Not knowing the makeup of the people that are doing construction in real estate on a commercial basis, I see that we've got many shopping malls that have gone up.
Yes, lately.
And we're seeing a lot of schools are going up. I'm not sure. Usually it's the developers and the financiers behind the construction of that would require to have insurances. If they are external, most of them probably have back-to-back arrangements with their financiers, where the financiers will say, take insurance in my country, where this financial source is coming from. So if you see, there's a lot of Chinese businesses going on, but there's very little of it that is being insured locally. So their financiers out of China will then organize the insurances, and that to us is also not a good thing, and we are in discussions to make sure that if there's any development that is coming from outside of Zimbabwe into Zimbabwe, the insurances need to be looked at locally.
Interesting. So on an advisory role, would you say currently, right now, there are opportunities to invest in real estate in Zimbabwe, as long as you are abiding to the relevant insurance of risks that are there?
Definitely, and we have the skills.
Okay.
We have the skills. Our insurance industry, there is a lot of talent. If you look in the region, many of the senior executives in different countries are from Zimbabwe.
Okay.
And we have very capable skills locally that can look after the insurances.
Yeah, and their investment.
Yeah.
Oh, interesting. So if someone wants to approach you as a basic homeowner, how do they go about it so that they know what they can insure, what they need to be covered, what is the risk involved? How do they come to you for consult? Is there a consultation, or you just take us through that?
I'll give you an example. A farmer wanted us to insure his drone. and he wanted it covered for about $18,000.
Okay.
And we said, yeah, we could find you cover for that, but we want the fuller picture. What are you using the drone for?
Okay.
Where are you using the drone? If it's on your farm, do you have cover for your center pivots? So we are not transactional as advisors. We are very holistic.
All right.
We don't just look at, you come in and say, I want to insure just my TV. And we say, okay, what about the laptops? What about the phones? What about your gas canisters? What about your pump? What about your gate motor? So we become very holistic in terms of what it is that you need to look at, and we guide you, because we don't expect you to know everything about insurance. We are supposed to be the ones who know about it.
Is it?
Yeah. So we actually sit down with you and we talk to you, and we go through your assets. How many cars have you got? Where are they parked if it's for motor vehicle? Who are the people who are using the car? Does it travel a lot at night? It all goes into the underwriting.
So you actually inspect and be physically there. Let's say it's a house. You're actually there to verify if the information that has been supplied is correct.
Yes, the valuer will come and they will verify.
Am I able to contest that, the value?
I would not want to use the word contest. It's a discussion.
Okay.
It's a discussion, because it's not in any insurer's interest to overvalue buildings.
Yes.
Because if there's a claim, then you've got to pay to the value that you have agreed to.
You're right.
Yeah. So insurance is about utmost good faith. Yeah.
Everything being done with bona fide intentions.
Yes.
All right. So maybe as we get to the last segment of this discussion, I want to go back to property management, whereby I have entrusted my whole lot, which is about 7 clusters there. And I know as people are using it, eventually it will dilapidate. Things will not be the same as they were when they moved in. Am I able to walk in and have you as our advisors look into that and then refer to a service provider who can have that insured, to say possibly after a year or two, there's something that can be done. It might not be total destruction of the premises, but then that value is added back?
For cluster developments, there's very specific insurances that you have to take.
Okay.
There's obviously a homeowners association. So they would be responsible for taking insuring the property as a whole, rather than individual cluster homeowners taking their own individual insurance. And this would be insurance that's covering things like the master property, which is the clusters themselves, common areas. Some have got clubhouses, they've got swimming pool or a gym. Then you would obviously need to take covers such as property owner's liability. So if somebody's visiting and then they sleep on a walkway, and then they break their back.
Yes.
The whole complex gets sued.
Yes.
So the homeowners association should have covers like that.
So who is pursuing this insurance? Is it me, the homeowner, the actual homeowner?
Cluster holder.
Or the cluster holder?
If you have a cluster.
Let's say it's a project whereby it's a lot, right? And on this lot there are 7 clusters and all of them are mine. Then it means I'm the one who can pursue that.
You can pursue that, but at the end of the day, you are the homeowner, You are the homeowner, and you are leasing out to all these people.
Yes.
Yes, you are the homeowner. Then in that case, you take out all the necessary homeowners insurance per cluster.
All right.
Yeah.
Very interesting. So this risk advisory and insurance matters that we're talking about, is this an option that is available to literally any investment?
Yes, definitely. Insurance is as necessary as oxygen in any business venture.
Well said, well said. Now, where can my listeners find you today or any other day? Where are you exactly?
Yeah, we are at Minerva House, 1 Kenilworth Road.
All right.
In Newlands, next to ZFM. We are also on George Sulindika Road, 14 George Sulindika Road in Bulawayo.
Okay.
And we also have a satellite office in Victoria Falls.
All right.
At Tiger Wheel and Tire.
I like the Victoria Falls option, so I can be on my vacation whilst I'm talking to my advisor.
Definitely.
Thank you so much for coming through.
Thank you for having me, Rumbi.
Okay, so
Much
there we were,
appreciated.
whereby we were talking about all the issues concerning real estate and how you can be secured and how you can be insured whilst you are investing in real estate in Zimbabwe. And for any other further information, please feel free to bring forward questions, and the details are on the screen for Lydia and ourselves. Thank you so much for your time.